Hi, everyone. Thank you for joining us. We're just getting started. This is Steven Reiter. I'm responsible for the options business with AvaTrade, and we're going to begin our webinar in just a few minutes. We have a record number of people signing up for our webinar today, so we're going to give everyone just a couple of minutes to sign in. I am monitoring questions, and I hope to have a few minutes to answer some questions along the way, so please feel free to type in any questions into the webinar system, and I'll keep an eye on it. Again, this is being recorded and will be available tomorrow in YouTube. Okay, it's time to get started. Welcome, everyone. My name is Steven Reiter. I'm with AvaTrade. I'm responsible for the options trading platform and business. Please feel free to ask questions along the way through the webinar system. I must start off by saying that everything is for demonstration purposes here. We are not giving advice on how to trade or what trades to execute. We're here to teach you about the platform, options, how to use the platform, how to set up your trades, how to execute, etc. And please do follow up with using the menus to find more webinars, speak with your account representatives, use demo accounts, get comfortable with trading before you execute. We will have this video recorded, and tomorrow you will be able to watch this video tomorrow afternoon when we've loaded it to YouTube. So the first thing, of course, you're going to do is sign up. If you don't have an account, you'll need to sign up for an account. You come to the avatrade.com or avatrade.it or whatever the AvaTrade website is in your country. If you just search for AvaTrade, you'll find it. Register for an account, log in for an account. If you log into your account, if you have one, like on this screen, just click here, log in, enter your credentials, and when you log in, you'll be taken to your account. If you have multiple accounts, for example, if you have both options and MT5 or MT4 or other accounts, you'll come to a menu. You'll be able to go to My Accounts on the side menu, click Accounts, and you'll always be able to see the full list of your accounts. Choose the options account, and it will log you into the AvaOptions account. Another way to get here is to simply go to AvaOptions.com and put in your email address and password. So let's say you've reached this point, you've logged into your account. This is a real account. You can see at the top my cash balance, 23,000 euros. My available margin is 20,000 euros. My required margin from the one position that I have open is just 2,400 euros. And so I have plenty of free available margin to execute more trades. If you don't have a demo account and you'd like to have a demo account, this is a new feature. Come to our side menu, what we call the hamburger menu, and click Switch Account. If you only have one account, like here, where I have one real account, I click Open Demo Account, and it will automatically open a demo account for me and log me in. Demo account was created, and I'm now in the demo account. As you see at the top of the page, I'm in a demo account, and it has 10,000 euros of fresh cash to work with. And I'm going to use this for the beginning of our presentation. So now we have both a demo account and a real account, and I can always click Switch Accounts to switch between them. I can switch right here, click this blue button, the account menu, choose if I want to use the real account or the demo account. So let's stay in our demo account. And let's learn a little bit about this platform. I am going to go a little bit quickly, but I encourage you really to work with the platform. It's quite intuitive if you just spend 2 or 3 minutes with it. On the left side of the page, like many other platforms, you have the list of instruments that you can trade. They're all streaming. I can scroll through them. We have crosses, we have equity indices, we have emerging markets currencies, we have some commodities. We'll be adding more commodities next week. I can also type into the search bar if I'm looking for, let's say, my Kiwi crosses. I just type in NZD and I see all of the Kiwi pairs. Let's say I want to trade Euro Kiwi. I click on Euro Kiwi, I immediately get a chart of Euro Kiwi spot. So this is just the FX rate. It's showing me a 15-minute bars chart. So each one of these vertical bars is for 15 minutes. I can change that to 30 minutes, 5 minutes, 1 minute, whatever I'd like, common to many platforms. We have here different types of charts. We have a line chart. You can choose a bar chart. You can choose candles, which is my favorite. And you have Heikin Ashi with an explanation of what that is, and hollow candles, if that's your favorite type of chart. I'll stick with candles. And we have indicators like moving averages, simple moving averages, RSIs, fractals, stochastics, Bollinger Bands. Choose your period for Bollinger Bands. Choose the thickness of the line that you'd like to see. Apply, and there's Bollinger Bands. Let's put it on a 15-minute chart. Whatever types of charts you'd like to have. You can also delete them here with editing on the right side. We also have drawing tools. If you'd like to annotate your chart or draw a trend line or an angle or something else, I'll try a trend line. Let's make it a little bit thicker. And let's say I want to draw a trend line from this point to this point. And that'll stay there. And then add another trend line. Trend line. I'll do this one in a different color. Again, a little thicker. From this point to this point, because I'm looking for a pattern here. And as soon as I've drawn these lines, they will stay with me as I update my chart. There's a 30-minute chart, put it on the 5-minute chart. It's all still there. I'm seeing an upward trend. Okay, this is an upward triangle. I think the trend will stay inside of this band, let's say. So I'm bullish. So I'll just do a spot trade. I'll buy Euro Kiwi. This is just trading spot FX like you could do on any other platform. What's unique? On the right side of the chart, we have a profit and loss diagram. If the market goes up, I'll have profits, unlimited profit potential. If the market goes down, I have unlimited loss potential. So it's a little profit and loss diagram. I can add limit orders. Click the word limit on the side of the page, and I can put in a take profit. Let's say I'll put in a take profit at 176. Double click to put in an exact level. I'll put in a stop loss at 175.50. There you go. I've set up my trade how I like it, and I'm going to execute that trade. I'm buying at market with a take profit and a stop loss. I click execute, and the position is, it says success, the trade is done, and now it's come into my open positions with the take profit and stop loss underneath. I bought Euro Kiwi, this bottom line here, I bought Euro Kiwi 80,000 at 175.867 with a pending stop. It's in blue because it's cool, it's pending, it's waiting, and with a take profit and a stop loss as described. But let's say instead of trading spot, I'm interested in trading options. I click the word here. This is my strategy menu. It says spot. I click that, and I can choose option strategies. The simplest option that everyone knows about is a call option. I'll choose a call option. A call option is a contract between you and your broker, in this case AvaTrade, a contract that gives you the right but not the obligation to buy an asset at a specific price on a specific day. Let's get rid of that trend line, the drawings. Get rid of that one as well. Okay, so let's choose. The call option is for a specific amount of time. The default is 1 week. Let's say I want to do an option for a month. I'm going to buy an option for a month on Euro Kiwi. The market's currently trading at 175.86. For a month, it looks like the trend is down, actually, and the trend is down, and I want to follow that trend. I'm going to sell a call. I'm going to sell a call option. I don't think the market's going to go higher because I see a very strong trend downward in this 8-hour chart. I can draw my trend lines again if I'd like. I'm going to draw it from here down to the current market level. Looks like we might be breaking out of that trend. I'll add another trend line. Well, if I think we're going to stay in this trend, that means I think the market will not go higher. So I'm going to be comfortable selling a call pretty close to the money. I'm going to sell an at-the-money call, a 176 call for a month. I'm going to get paid 120 pips for that. That's a lot. That's a lot of pips. My break even is going to be 120 pips higher than the current market rate of 176. My break even, you can see, is going to be 177.20 all the way over here. So I'm going to sell this call. Sell. That's going to require some margin. But because I'm already long Euro Kiwi, selling a call actually is going to reduce the amount of margin that I require. Execute. Trade is done. And there it is. So now you can see that I'm long Euro Kiwi was the first trade that we did, and I've sold a call in addition to that, which is hedging the opening trade. So I'm long from one position, I'm short from the other position. I go to my risk manager, you can see the net risk, Euro Kiwi. My total delta is 39,000 because I'm long 80,000 from buying FX, and I'm short 40,000 from selling a call. And if I simply click Euro Kiwi, all of our positions in Euro Kiwi will show up on the screen, and we can see what our net risk looks like. Our net risk is net. We've gone short the market. We've gone long the market because we bought cash, but then I sold a call. So our net risk looks like this. We're going to profit actually if the market goes higher. We put on 2 trades. That's what our net risk looks like. And they're kind of opposing trades, so I might want to close one of them. Let's close the spot trade and just leave the option trade. I choose the position. I'm choosing this cash trade. I click close. That trade is closed. It disappears from my open positions. I can see over here on my closed trades that I lost 26 euros from that short-term trade. And my open positions, I only have the call left. Right? There's our call. That's our position. We've sold a call. We sold the call. And so because we think the market's going to trend lower. If the market trends lower, our option is going to finish out of the money. So we're going to be in this profitable area. The option will finish out of the money. We're going to keep all of that premium if we expire below the strike. So again, we've got this whole strategy menu. Whoops, excuse me. Let's go back here. Let's look at euro dollar now. There's a euro dollar chart. We've got our strategy menu, calls, puts. When you buy a put, you're taking the view that the market's going to go lower. So you have unlimited profits as the market goes lower. If you sell a put, you have the view that the market will not go lower, and you're going to earn premium from that trade. If I do a strangle, I'm going to be trading both a call and a put. Let's do it for a month. If I buy a strangle, that means I'm buying a call and I'm buying a put. So I'll profit if the market has a solid move higher or a solid move lower. If the market stays between the strikes at expiration, I'm going to lose all of that premium that I paid up front. So let's look at the elements of the screen for a moment. As we said, on the left side, we have the instruments. We have an orange button here where you can choose categories like FX majors, indices, all, favorites, which are denoted by the stars that we've applied here under all. Anything with a star highlighted is a favorite. So let's add Eurodollar to our favorites. We've chosen a 1-month option. So the platform is automatically giving us 1 month of history. It's showing us in the center these arcs. We have in the center arc or parabola, we've got plus and minus 1 standard deviation of movement. The next set of arcs bounded by these white dots is plus and minus 2 standard deviations of movements, which means that we are 97 or 98% confident the market will stay or finish between these two white dots in 1 month. And then we have plus and minus 3 standard deviations, and we're 99+% confident that the market will stay between that third range. So the market, the platform is bounding the risk for you. It's giving you an appropriate range so you understand that the market can move in a different amount over different time periods. If I change my expiration for a week or 2 days, then the market has a very small range. If it's for a month, we have a bigger range. If it's for a year, we have a bigger range. You can see how interactive the platform is. And again, let's go for the 1 month date. Now, a very popular strategy is to sell a strangle. When you sell a strangle, you're going to earn income from 2 options, from both the call and the put. But at the end of the day, when the options expire, you can only be in one place. Either you'll be higher, or you'll be within the range, or you'll be lower. And the beauty of it is you can only lose at expiration on one of the options. If we're much higher, then you're going to keep all the premium on that put that you sold, but you may be at risk if the market moving too high. And if the market moves very low, again, you're going to earn extra premium because you sold that call, which means that my range of profitability is very large. I can put my strikes around the entire range observed for the past month like that. I can do a 107 put and a 109.25 call, and I'm going to earn 50 pips. That means that my range of profitability is going to be 50 pips higher than the upper strike and 50 pips below the lower strike. You can see the break-evens where the red and the green meet at 0. You can see that we've got a huge range from 106.50 all the way up to 109.75. We're going to be profitable if we finish anywhere in that range. The red and green on the profit and loss diagram shows you the expiration P&L. The orange line is showing you your P&L today as the market moves up and down. And we have this horizon slider in the center. As I move the slider, you can see how the option values propagate over time. Today, we're on this orange line. At the money, the delta is pretty close to 0, which means I'm balanced by the call and the put. I've sold a call and a put, so I have effectively almost no exposure to small moves in the underlying rate in euro dollar. And then over time, the behavior of the option approaches the expiration P&L. So that at the end, I'm either going to be flat, or I'm going to be short, or I'm going to be long. Options, remember, in our platform are by default cash settled. I'm being asked about option chains. If you want to see the option chain, there's a little icon here. See an option, this looks like a grid. If I click option chain on, you can get the same information, all the prices in a grid. So you still have your P&L diagram, but you can see all the values, and therefore you can kind of target the premium that you want to earn. On the left side, you have the call, bid, and ask for each strike. On the right side, you have the put, bid, and ask, and delta for each strike. So as I move my handles up and down, you can see the premium and the P&L impact. Very interactive, and that's the most that's the more common way that that traders look at the market. Our view was that just looking at a lot of prices isn't enough, because it's just numbers. You don't feel there's no interactivity there. So we've combined our own design. Where has the market been? Where might it go in the center? And what's your expiration P&L now and at expiration? Remember that orange slider? Or you can see it in grid format. Another question. How can I save my instruments forever? Every new lock, my lines are lost. I think this trader is asking about saving the indicators if you want to set up some trend lines or your favorite ways of looking at things. It's a feature that we'll be adding this year that you'll be able to save your default setup. But right now, when you change assets, everything gets reset. Now I'm going to switch to my real account for a moment because I want to show you a great feature that we have called AutoChartist. AutoChartist is a third-party tool that we've integrated into our platform that gives you chart pattern recognition, basically signals for the markets. It suggests trends lines and suggests we see this pattern, therefore it indicates the market may be going here. In order to unlock that feature, you do need a real account. So I'm going to switch to my real account, as I showed you earlier. I get a confirmation. I've switched to my real account. And now I have these trend lines, these indicators. This little orange ball next to Eurodollar has the number 3 in it. That means that there are 3 signals that have been identified. I choose it, and I can see what they are. There's a channel up signal, which has a pretty high clarity rating. I'm going to choose that. And it's going to show me these trend lines. And basically, it's identifying a channel up. It sees a bullish signal, and it suggests that you put a stop loss at 108.38. Now, these signals are specific to the underlying asset. It doesn't say anything about implied volatility or options trading. I'm going to click Apply Pattern, and the lines that were identified are drawn right onto the chart. And you can see then, make your own, take your own view about what you think about these trend lines that were identified. So it suggested a bullish trend. It suggested that you should put in a stop loss, that you should buy the market and put in a stop loss at 108.38 if you agree with this trend line. So it's drawn it for you. You can go ahead and execute that if you like, or you can modify it. You don't have to do these suggestions. It's just a suggestion, which I think is very helpful and instructive. If I click here, I can look at the next pattern that was identified, which was called a rising wedge, which is very similar. This is based on the 4-hour chart. The first one was on the 30-minute chart you see here. This is on the 4-hour chart. We have a rising wedge. Apply the pattern. It basically sees more convergence in the lines over time. Let's bring in a little more history. So this is suggesting, again, a bullish trend. And the third pattern that was identified, which was resistance. Basically, it sees the market on a 15-minute chart bumping up against resistance. It believes that this is a bullish signal. It's suggesting that we're going to get up towards that resistance again. Apply pattern. It's drawing the resistance line. And basically, we've fallen away from it. And the pattern suggests that we're going to, again, approach the resistance at 108.59. And it's suggesting a stop loss at 108.39, just in case we're not right, because it believes the pattern is invalidated if we drop to that level. The vertical, it's maybe hard to see, there's a thin vertical blue bar. That thin vertical blue bar is showing you when this pattern was identified. So you can see what the market has done since the pattern was identified. Let's choose dollar yen. That's got signals as well. It has some strong signals in terms of clarity. Again, on the 15-minute chart, it sees a bearish signal, which is called channel up. On the 4-hour chart, it's got a bullish signal with more clarity. Let's look at them. Channel up, basically it says that we've reached the top of a channel and therefore the market should bounce down back towards the bottom of the channel. And there's the picture. And so far we have not broken out of the channel. But then you've got another signal, which is rising wedge, and this one is bullish, and it's suggesting a stop loss. And this one is basically saying, it's said here that we're going to bounce up towards the top of the channel. So we've got all sorts of signals in every asset. Here's gold. Gold has a channel down on the daily chart. You might find breakouts. There are all sorts of signals that you might find. Here's support in Aussie dollar. So this Aussie dollar chart is a bearish trade because we've broken through support, and therefore it thinks we're going to drop further, and so far that's correct. It was identified exactly when we broke through this particular support level. The market has gone down, and it's suggesting to put in a take profit down below at 65.18. If you like this trade, you click the sell button, choose your size. Let's do it in 50,000. Execute. And this is just a spot trade with a take profit. Aussie dollar. Sorry, there was a take profit and a stop loss. My mistake, it was off the screen. So it's put in the full trade. Okay? So that's for trading spot. Let's look at very popular now, options and equity indices. I'm going to choose indices. We offer lots of indices, but for the moment, we're offering options on the S&P 500, which is upon which this US 500 is based. US 500 is based on futures. US 500 cash is based on the cash index, the underlying cash index of 500 major stocks. If I click on the asset, I get a chart. And let's look at options. I click the option chain. This is the way people like to look at options on the S&P or options on the equity indices. And I'll choose my strategy. I'm interested in selling a put. And I'll choose the sell the put for the 15th. Notice that some of the expiration dates are in green. Those are PM expirations, which means they expire at the close of trading in the stock exchange in New York. And others are in blue. Those are the monthly options, the third Friday equivalent options that expire at the open and stop trading on the day before, as indicated in this pop-up when you go to trade it. I'll choose this date. I can choose my strike. I can click to execute. Choose my size, sell a put. Okay. I'm being asked about break-evens. Where do we find break-even points? We don't yet show break-even points explicitly on the screen, but you can very clearly understand what they are. If you buy an option, let's say you buy an option, buy a put on the S&P 500, on the US 500 cash. If I buy a put at 5,000 and I pay, as you see here, it costs 19.5 points. That's 19.5 index points. That means that my break even is going to be 19.5 points below 5,000. I bought a put. At expiration, the put has a positive payout if the market finishes below the strike, below 5,000. I've paid 19.5. Therefore, the market has to be at least 19.5 below the strike to start making money. And you can see that here where the red and green meet at the break-even point. So just take your premium and you can figure out where your break-even is going to be. I'm being asked again about recording. This is being recorded. It will be uploaded tomorrow afternoon to YouTube. Just go to YouTube, or in the side menu, you have video tutorials, and click here. You'll get a list of all sorts of webinars. This one should also be included in the list tomorrow afternoon. And by the way, while I'm here, don't forget that we have an amazing mobile app. It is effectively identical to the Webtrader that I've been using here. It's perhaps even prettier, and we've got tutorials online for that as well. So you have one account. You can use it on the web. You can use it in your mobile phone, either iPhone or Android. And anyone that's registered for this webinar, so anybody listening now, is going to get an email, hopefully tomorrow, with a link to that webinar tomorrow or in the coming days. So you'll be able to find it yourselves right away. So definitely use the mobile app. It's interactive. You can keep it with you. Same account traded on your phone is the same account you're going to trade on your desktop, on your laptop, whatever it is you like to trade on. We also have on the side menu access to the economic calendar, which is under trading tools here. You've got the economic calendar. So you've got access to know what's the news, what's coming, what information is coming out in the next week. So you can get an idea of what sort of risks your option position might be facing. It's got all sorts of filters. It's a very popular tool to use for options trading in particular, because Time is money. If there's a lot of news coming, there's more volatility expected, options will be more expensive, and there's more chance to make some money, either by buying options or by selling options. You also can generate reports from the side menu. I can generate an account statement and see all of the activity in my account. I can do everything, for example, for the past year, past month, just today, generate tax reports, etc. It's all available here. Generate reports as you wish. Risk Manager shows us our open positions broken down by currency or by currency pair. But down at the bottom, by instrument, so dollar, yen, Aussie dollar, and US 500 cash index. We have positions in each of these, and you can see what your net risk is. Total delta, how much of it is coming from cash or FX or the underlying, how much of it is coming from options, and what's your total risk. So in dollar yen right now, I click dollar yen. The only position I have is that I've bought dollar yen spot. Let's do a trade against that. Let's sell a call against it and give up some of this upside and monetize it. I'll go to the side here. I'll look at all dollar yen. I'm going to choose a call option. I'm going to sell a call above the market for a month. I look at my indicators and I see, well, there's a strong signal here, rising wedge, a bullish signal. So I think the market may go higher. So I don't want to give up all of my upside. Right now I'm long the market, which is great. By selling a call, I'm going to take in some income. I'm going to sell a call up here, let's say at 152 for a month. My open position is in 80,000, so I'm going to do a call, sell a call on 80,000. Sell. I'm going to get another 41 pips for that. That trade is done. So my dollar yen positions, I bought cash and I sold a call. Where is that call? There it is. I sold a call in 80,000. In Risk Manager, it says I've got two positions now. When I click on dollar yen, both of those positions are combined in my open position. So I'm long the market, which is why I'm going to lose if the market goes down. And I've sold a call. So I've sold some of that upside out. And I've earned income up front for selling that call. Go back here, you can see I've highlighted all my positions. I was initially just with a long position, and then I sold a call, which gave up some of my upside. And you can see over time how my position evolves. My maximum profit is going to be at expiration 791 euros. And over time, you can see how it's going to evolve. Running out of time, I just wanted to make sure you get a quick understanding of how the platform works, the flexibility. You can trade all sorts of assets with leverage. Just like with the MT4, MT5, other platforms, you can do the regular buying and selling, but with this really unique and excellent interface where I can put in take profit, stop loss, entry limit orders. So here I'm saying I want to buy natural gas at 174. I'll take a profit at 177.78. I'll take a stop loss at 172.60, etc. And I can go ahead and execute that trade. And that is all pending. Right? It's a pending buy with a contingent take profit and stop loss. So if the buy is filled, I will then have a take profit and stop loss. Everything is here. It's intuitive, it's smooth, it's unique. I hope you like the platform. Definitely trade options. Use a demo account. Get familiar with options before you start doing anything too crazy. Here's iron corridors. And something I need to mention always, people think that options are risky. Options are no more risky than trading the underlying asset. It's all a question of how much leverage you use and how you trade. Here's an example. This is called an iron condor, where we have limited upside and limited downside. This is not a risky trade. I'm buying a call and a put. and I'm selling on the outside a call and a put to reduce the cost. I can go the other way. Here I'm selling a call and a put, and I'm limiting my risk by buying out of the money calls and puts. This doesn't look great for a 1 week option because you're really eating into the premium with all the spreads, but do it for 2 months. If you're really confident about the range of a market, it's a great way to put on a trade with limited risk. We're most confident the market's going to stay in the middle here, as you can see by the standard deviations. So if the market does stay between the strikes or between the break-evens, which is the strikes plus the premium I'm going to earn, this is on dollar yen, I'm going to have profitability. And on the outside, if the market happens to move further, my losses, my downside is limited. So this is a 4-leg trade, limited risk on all sides and limited profitability. But it also has limited margin requirement because our margin calculations are based on risk. Any more questions? Can you buy on a limit order? Let's do a quick one. Let's look at the pound against the dollar. I'll just do a spot trade, for example. Click the word limit. I have 2 lines. We have the opening limit orders and the closing limit orders. So if I put the market here on the opening limit order, buy, I'm putting in the limit order to buy at 126.25, only good for today, good until the end of the day, which means 5 p.m. New York time. Buy limit. I'm saying if the market drops to 126.25, I want to buy. Click buy limit, execute. It's in there. You see it right away in blue. It's a limit order. We can also put limit orders on options, on single option legs. Let's say I want to buy the pound if there's a dip, but not spot. I want to buy a call on a dip. I want to buy a 2-month call. This 2-month call with a strike of 127 costs 110 pips. I want to buy it for less. I want to buy it for 60 pips. Apply. Now, I don't think it's going to get there today, so let's make it good for the rest of the week. 60 pips. So I'm leaving an order to buy a 127 call for 60 pips. As of right now, based on implied volatility, if it's unchanged, that should happen as shown on the chart. It should happen with spot trading around 125.50. Spot drops to 125.50. I should be able to fill that order and buy this call for 60 pips or 61 pips. Click execute, buy limit, 60 pips. And there it is. I put in an order. Where is it? To buy the pound, to buy this option for 60 pips. There it is. It's buying a 2-month option, strike at 127 and 80,000 for 60 pips. So we can do limit orders on options. You can do limit orders on underlying assets. You can put take profit and stop loss. We do not yet offer limit options on, we do not offer limit orders for US 500 cash options. Those have to be executed at market. But for all the FX, gold and silver, you can trade with limit orders to your heart's content. That's pretty much all I've got time for today. Thank you very much for joining us. You can always email us questions. You can use the chat system on the platform to ask questions as well. There's a chat system right here. And we have a bot that can answer a lot of questions as well, as you can see. And if the bot can't answer questions, then you'll be passed over to an agent. We also have help and FAQs on the AvaTrade website. I'll just finish again by saying nothing we've said today is a recommendation on what to trade or directional or anything like that. This is all informational. We are an execution only business, which means you decide what you want to do. We don't give you specific advice, but we certainly give you the tools to enter this market, to trade the market, and and to profit from controlling your risk. And that's really what options are all about. It's not just buy and sell like you have with other platforms. You can put time and levels and strikes and limits and everything else to help you control your risk. Thanks very much, everybody. I'm going to end the webinar now. Hope to see you again soon. And more importantly, hope to see you on the platform. Trade carefully. Bye-bye.